I shouldn't really be sharing this, but I'm going to give you a recent market recap from inside the Headwise community. Let's go. Okay, so welcome back, traders. Now, thank you for having the patience with me while the wife and I have been away. Now, in this week's weekly update, I'm going to go over the recent price action. Now, you would have been following my outlooks despite me being away, and there's not been much to report. Now, the first thing to notice is we have been ranging significantly, right? We have came back to this key level, and as you noticed before, in June, we ranged in this area. We wicked the lows, we didn't quite take the high, and then we took the high with momentum. Now this is the same again. We wicked the high and then we've took the low. Now, this has been a difficult period to trade. In my outlooks, you may have noticed that I'm simply reporting nothing, right? So I really need you to understand that this is the gritty bit of trading. This is the unspoken truth about trading that nobody wants to hear. We are going to have terrible price action, right? And it's your discipline and patience which is going to set you off from break even, negative, to consistently profitable. Knowing when to sit this current price action out, honestly, this is going to be one of the biggest aha moments you are going to have in your whole trading career. This rubbish. But I'm still going to show you through the Headwise Markets rules. If you wanted to get involved, you still possibly could have. So typically we will go back to the start of the week, right? And we'll map this with the, I think we need to go back to the, I don't know why I stopped talking then, but we'll start at the 13th and we'll just know where we're at. But in this particular instance, we need to go back a bit further. So what I'll do is I'll remove that big red line because it's horrendous. And what I'll do is I'll put a little mark under here so we know the week, even though that looks ridiculous. So we was bullish at this point, significantly bullish. I had this as my range low, okay? Now, this here, you could have gone there or there to map your range low. Why did I want this as my range low? Well, typically, I have a slight peak on the 1 hour. Now, because we've had such impulsive price action, I was happy to class this as my external, but I was also aware of the low underneath. Now, if you check my outlooks, I did, since the price has played out, moved forward, etc., I did change my range low to this one because it gives us a clear picture, right? When we are searching for liquidity or heading towards liquidity, if we have an area that's been ran just below it, then this level here is old news, okay? And because it's old news, we don't need it. So what are we reacting off currently? We was reacting off this H4 external, and I altered my GAN box. Now, as you can see, if you go through my outlooks, we can instantly see that I wasn't happy with this wick closure. Wick closures automatically give us an early insight to what's about to happen. We're going to get a short-term pullback or a change of direction. Another thing to notice is we know the market needs fuel to run. This has been extremely impulsive on the way up and on the way down, V-shaped. Now, there is no liquidity within this leg. If you go back through the outlooks and have a look at each day in this period, so go back to the week before, I spoke specifically about this impulsive price action is not good for us. Not having the clear structure, not having the entry model present on the lower time frame is a often side effect of impulsive price. Now, obviously, if you catch yourself in here, right, let's say you could tell this is a lower time frame sweep. Let's say you caught this lower time frame sweep, and we don't teach you to aim for the stars, but let's just say this was our previous all-time high, right? I'll put it on a GAN bar so we can see it at all times. This was our previous all-time high, and we had a huge area of liquidity here, okay? So you would have known me by now. This was our first port of call on the 4 hour get lost window security. If we caught a position here, our next logical target to take profit would have been this key level. Now, how we react to this key level would have gave us a whole new picture. Solid candle closure. In this area with this solid candle closure, we can then target the next key level, okay? Which is this internal 4 hour low before the all-time highs. Now, although you can see hindsight that we've had a lot of movement, right? On an intraday perspective, it gave us little to no opportunity to get involved. Sitting there watching and waiting while this plays out is extremely frustrating, especially when you want to get in the market. However, this is what I preach. You need to lose the desire to be in a trade and fixate on the process. Fixate on the process. Your only goal is to have a consistent approach. Consistent approach with a proven edge is what's going to make you profitable. The sooner you shake that urge and desire to want to be in a trade, you're going to develop your patience, your discipline. You're going to incur a lot less losses, and you're going to think as a business, right? This is sustainable. This is what I can do long term. And yeah, so this is what we preach, okay? Sorry, I digress, go off on my usual tangents. What I'll do is I'll drop down to the 15-minute and we'll just make sure. So the sessions aren't here, but what do we have? We have at 8 a.m. textbook trade. We have at 8 a.m. sweep within session, okay? Now this could be your first pie. You'll have targeted the internal high, sorry. The stop loss is rather too big. In fact, I can actually remember calling this play out. One of our members took this trade and got in on this position and bought to the high. So well done that particular student. He also had an 11% month. So bravo. Well done. He took this trade. I didn't want to put any capital on the line with my short target of a 1 to 1.7 risk to reward. Obviously, we can see it's played out. Well done to Liam. I'll just say his name. Well done to Liam for catching this move. I did actually put the tool on and target the next liquidity pool, but hesitation got the best of me. When we take an internal high on the H4, we can typically expect a short-term pullback on the 15-minute. We know this. We know this with absolute certainty it's coming. Now, does it make sense to buy up here? There may be a lower time frame entry, but we specifically stick to the 15-minute with our 4 hour, our key driver, to keep us out of this noise. Any mentor or group that tells you trading is passive and trades on any time frame which is lower than the 15-minute is not telling you the truth, and it's a harsh reality. Does it mean that we can't profit on the higher time frame? No, but it makes it a much more sustainable process and to trade on the higher time frame. So this actually ran to the all-time high, which was a 4 to 1. But if we look back at the previous price action, right, we have been ranging in this huge area. Does it make sense? Does it make sense to hold to the all-time highs? No, okay? So I took no positions in there for those reasons where I've just explained. One of the members, I keep doing this squiggly blue line, it's absolutely driving me insane. One of the members caught a lovely trade in there, extremely valid. We know that session liquidity and timing is absolute crucial in trading. So I did foresee that position. However, the desired risk was not worth it to me, or the reward wasn't worth my particular risk idea for that trade. And it's fine. You'll know that through your data that the obvious trade always comes. It's always around the corner, okay? At the time, I won't sugarcoat it. I did think, okay, I'm having students out trade me this month, right? Which is, it makes me proud to see. My month last month wasn't the best. My execution was quite low. Fortunately, my outlooks and my foresight was top tier. over 80% outcomes. My execution was just poor. I missed 3 golden positions that I called out within the group. And thankfully, some of you caught them because my execution, as I've said, wasn't great. But before we carry on further, my execution has been bad for the last five weeks, right? And that's trading. You're going to go through patches in your life where things overload you, you add too much. I'm putting so much time into pushing the group, my own personal fitness and being a father, that my execution was the one to take the hit. It's not an excuse. Better believe that I've journaled and I'm going to put my own system in place to try and execute better this month. It's just where we're at. It's just unfortunate that since this month started, we've had awful price action. So that's enough digression. I'm going to continue. As you can see, we came up and came straight back down. Now we are still bullish at this point. So you could have sold the momentum within this area. Okay. Now I wasn't even interested in anything short term in this area, simply because we ran the all-time highs. Now, when you're going against that momentum, 2 things really. One, it's not clever to go against the high time frame narrative anyway without confirmation. And 2, I'm bullish, okay? Trying to catch every counter move opens you up for more losses. Yes, you may make more percent over the year, but short term, you don't know without experience what the losses do to your psychology on a psychology perspective and level. So why open yourself up to more losses when you can wait? So we're getting towards a week now. We had 1, 2, 3 wicks on this large range. We had a huge area of imbalance created here. Now, I did predict this pullback, okay? I didn't take the trade because I didn't want to go against the momentum. I was hoping that we could get a nice position buying up to the EQ, okay? So what I'll do is I'll do another stupid squiggle that shouldn't be in there. We'll map the ranges from this point on, okay? Exactly how we do it in the Headwise Markets mentorship, and we can go on from what's happened. So, as you can see, we had our second range broke with a body. So we had break 1 with a wick and break 2 with a body. Now, at this point, the M15 switched back to bullish quite soon, and it was pretty obvious we was going to print higher prices. So we had this low that was intact on this range, and we had this previous high. Let me drop down to the 15 minute. Now, it's been a particularly hard week to navigate, okay? So as you will be more than well aware, I have sat this out, all right? But for the group's sake, I'm going to go through the price action. So Monday morning, we had a higher time frame sweep. I'll mark this on so we can see it. We took a 4-hour low. We started to have the pullback phase. We had loads of imbalance within this range. No resistance stopping the move back up. I put this in the group. We had a market gap, which we tend to be seeing, right? We are heavily bearish at this point. No liquidity, no resistance, no pullbacks. So what do we have here? We have a session sweep within session and a pullback. Let me get rid of this squiggle. We had the market gap fill. We had a session sweep within London, and we had a candle closure. So this here was our first entry. Now we had our confirmation candle here. So we could have gone short. Now the problem with this for me, this was outside session, okay? Now in this market conditions, you need to look. Does it make sense targeting the 4-hour range external, right? Does it make sense? We trade on a trade by trade basis. If we look at the 4-hour, look at the conditions, the wicks, the price. Does it make sense for me swinging for the external in this trade idea? No, it simply doesn't make sense. So in this instance, we can target the origin of the sweep, right? So this, let's just say this confirmation candle, you took this short, even though it is outside session. I don't trade outside session. You may have collected data on a larger session window, but this is valid, okay? The origin of the sweep is all the way at the external, the H4. So you would take a 2-to-1 and be done with this, right? In these conditions, we're not swinging for the fence. We are being very reserved in our targets. Each market, each trade idea has its own target, okay? And that target is determined by what price action is currently doing, okay? Now, you could be in this trade targeting the EQ of the range or a 2 to 1. Excuse me. Then what do we get in New York session? We get the same again, okay? We get a sweep. We get a confirmation candle within session after 2:30. And again, you could target a 2 to 1, okay? Now, as you can see this played out, right? If we go back to the 4 hour, let's see if we can make this a bit more appealing. By the way, as I said, I didn't take these positions. Look at this price action. How I viewed this is internal 4 hour structure. And we had a sweep of the internal low. So I expected higher prices, or at least up to this range EQ. So I wasn't even looking at the shorts. We was fueled by the high time frame sweep. So my bias was completely wrong, okay? But my rule set kept me out of these subpar positions. But overall, we had a wick break and a body break. So we are bearish. So actually, if you were to take these trades, you could have capitalized on these moves, even though the market conditions wasn't great. And as you can see, that played out. So that's 4% anyway. We came into discount here. As you know, in range price action, we don't normally sell in discounted area because we're too close to the low, and this is a valid area to buy. And as you can see, as soon as we came in discounted prices, we never took the external, and then we ran from an internal low mitigation, and this mitigation is what fueled the move to take the external, okay? So that's where we're at. At this point, we have London session. We have no session sweep to get involved in this buy. This is a 5-minute sweep, but, you know, to take this entry on this 5-minute, I'll show you briefly, is hindsight is hindsight, okay? We are waiting for the highest probability moves. We are waiting for what we want. We're not hindsight spotting these sweeps and saying, oh, we could have took that, all right? As you can see, it's a 5-minute, it doesn't even take the low. And you wouldn't have got involved anyway because the confirmation candle was wild. So, the next part is the external, okay? So we're still bearish at this point. And I'll quickly go on the 4 hour. We've had a wick break and a body break. We've had no like higher time frame sweep, nothing. So we are still bearish at this point, okay? Now what I'll do is I'll mark the internal high because this was a key level where I had marked on our charts through the outlooks throughout the week. The reaction to this level was going to tell us a lot, okay? Now, if you go over my outlooks, I know I'm a broken record, keep saying this, but we're pairing you up to read my outlooks and think the same as me. In my outlooks, I specifically stated the reaction to this area is crucial for us. This is going to tell us a lot. I am still bullish at this point. Let's follow the path tool. Okay. As you can see, that had a high time frame sweep. That low was protected, and we head to the external. So this is what we trade. Look at my 4 hour line. Internal bullish structure. It's a bullish asset. We had a lot of imbalance. I was fully bullish at this point. Even more so that when it ran to this external here, I wasn't interested in the short. This low had not been ran by the previous low, so it was protected. So if we was going short, in ideal market conditions, we would have ran that low with a body closure, and we didn't. So we're just ranging again, okay? Now, if you go through one of the previously uploaded videos, I think it was 4 weeks ago, can't recall the date, I show you how to profit off range bound prices. It's not something you need to do, so don't feel the need to go back through and have a look or watch it. But this is why we trade off 4 hour liquidity. If you'd have got involved pre-London in this area, you would have took a buy, okay? and took profit. If you would have took a sell off this internal and external here, guess what? You'd have took profit, okay? Now, let's go back through because, again, my bias was wrong. I was bullish. We had a external range sweep, which was here. We had an inducement, another low created, that got ran. And then we had a low that was respected. So I was waiting. In my outlook, you will see how we react to this area is going to tell us everything. I said the ideal scenario is we close with a solid candle closure. We start printing higher prices. We have a short-term pullback, and then we can get back involved with the anticipation that the internal structure is going to target the all-time high again, which is now this level, let me might add. So 15-minute. Let's go back to the sweep. Again, it happened in session, look. This is our first confirmation candle. Now, you would have incurred a loss within this position, okay? This would have been your first trade idea. But you would have protected the high because this is what we do. Capital preservation over profits. So would you have wanted to be in this? You know by now that I encourage you to collect your rough idea of your stop loss size, right? Typically, 30 to 80 is what we sit nice at on German DAX. It does change when the market conditions change, but your data will tell you your average stop loss size, and you can judge whether this position is worth it or not. Now, you would protect the high. Is the stop loss worth it? No. Can we target the EQ with a 2 to 1? No. If you look at the current 4-hour position of this trade, it's range bound. Would it make sense to target the external in these conditions? Probably not. So you'd be looking at a 2 to 1, right? We would reserve our targets. So let's say we just took this to the external, which, by the way, well done if you thought about this idea, but it's just not very likely. We could have had a break even at this low here. That might work out close to 2 to 1, which is our rules. 2 to 1, look, bang on. That could be our break even. And what do we have the next day? So this position is running. Next day, we have Asia sweep. Classic, slightly early again. But, you know, we don't get involved in this. It's too early. You can have extended trade sessions, but you need the data to make sure it works. Trading needs to fit around you and not around the session time. So as long as you can test the period where your concentration is at its highest, if you want to trade at 6 a.m. and the opportunity is golden, go for it, right? Just get the data, right? As you can see, range bound liquidity, sessions typically are range bound. We've had a sweep and a confirmation. 85 stop loss, it's ran up to 85. Confirmation in, let's target the external again, okay? And again, I was still bullish. I'd already said multiple times within the trading community, I'm not interested, but let's map this again, okay? Let's just go again, right? The macro is bearish, right? So let's just go again. Session sweep, external target. Session sweep, inside a session. Let's put this stop, let's put another short on. Sweep here, this would have been a loss, right? Although it's 230, so I would have waited till after 230. But if you had extra, you could have took a loss here, which is valid, right? And then you could have probably re-entered again. So let's put this on there. I don't want to do a biased approach in our hindsights. You need to be as honest as yourself as you can. You would have took a loss there. I have a 1 loss a day rule per account. If you haven't inherited that rule from me, you may have got involved again. We had a sweep again after 230, which, you know, 230 when that New York bell goes, we know it carries more weight. And then let's pull this across. This 89, 79 would have ran that up to 80. Let's pull this across. You would have possibly took another loss, or you would have gone break even at this low. Now, why this low? Because we're trading on the EQ, okay? Well priced. EQ, terrible, right? This is why I teach you. don't trade around the EQ, because 9 times out of 10 in a range bound market, price is gravitated. It's the war between the bulls and the bears. The EQ is like a magnet, and look at the price action. Choppy, can't make up its mind. And yeah, there's a reason why I wouldn't even entertain those, but they could be 2 losses because they are session sweeps. The macro is bearish, right? And we can go again. Finally, we will go with this last trade at 8 a.m. This is more like a 5-minute refinement. 50-minute high swept. Confirmation candle is too large. If we go to the 5-minute, I know we do have a 5-minute entry model. I don't trade it, but if you look on the 5-minute in this particular trade, I know some of you do trade the 5-minute, which is fine. We've had this ran, 5-minute range ran, confirmation candle, pinball wick, 5-minute confirmation. It's still large. We could target the external on the bias that we are still bearish with the external the target. And that is pretty much. I'm not going to cover the Friday because it's rubbish, and the Thursday and Friday was pulling back after we ran the H4 external. Even though actually Friday, a member took the the early 4-hour sweep and caught profit, caught a 2-to-1 trade. Well done him. Again, he's had an exceptional couple of months. I believe he took this sweep here, which was valid on the 4-hour. Then he played the confirmation candle slightly too early around this area, and he took a 2-to-1. So, did go on a tangent there. What do we have? A 2:30 sweep, okay? A session sweep again, just pre-London. This is what people do trade. Session sweep, sweeping session, session sweep loss, session sweep loss, a sweeping session again. So we had 3, 6, -2, 4, and to add that back up to a 6. So this week has had a potential 6%, just having the minerals to trade the exact rules that we teach inside headwise markets. Don't know why I said headwise. The famous stutter came back. This is a 6% week, okay? I took no trades in this week, right? When you have capital, you'll be a lot more reserved with what you're willing to risk on. The only position I would have took if I could have got involved was this area here, because I was bullish and that was the sweep for me. Internal bullish structure, that was the sweep. It was way too early, and then that's it. I could have changed my bias at this point, but for the reasons I explained within the outlooks, I didn't get involved. But if you zoom out now, hindsight's beautiful, right? What do we have? Bearish structure, large external, failed to shoot back into the range. This failure engineered a high. We swept the high external, and then we have broke the low. It's textbook. Textbook entries, textbook system, but what's not textbook is the price in between. Now, any of you have any questions about this, you know what to do. Hit one of the coaches up, me or Claire. We'll answer any questions. I took no positions in this price action, and yet I know members that have done extremely well within this price action, okay? Thank you for joining me, traders. I'll see you next week inside of the community. If you have found any value in this video, please subscribe, like, and share it with another aspiring trader, and maybe we can help them on their journey.